This one I think what it is really is it's a little bit of an alarm bell. It's a little bit of a flag. Let's talk about what this could mean in terms of what RBC is doing in the pre-construction space. And it's funny because part of this, I think they were pitching to buyers as a perk originally, right? And as we dig deeper into it, there's a little bit more concern as the markets switch. So I want to throw it to you, Matt, and talk to me a little bit about what Ben's talking here in regards to RBC and these blanket mortgages.
Yeah, so blanket mortgages are not anything new. They've been around for quite some time. Typically, they were used in the detached market where someone was going to move into the property in the next year or two. They could go in and say, we'll approve you for this price, we'll guarantee your mortgage, everything like that. But the difference, this more applies with the condo market. And you'll typically buy a place in maybe 5 or 6 years, it'll be finished. Well, you can't really do a blanket loan, 6 years down the road. So it's starting to come up that it seems like, especially potentially Royal Bank is giving out blanket loans on properties. So there was an article that came out with, from the Globe and Mail. So this one's Toronto buyer left in lurch as pre-construction condo now worth less. So he bought the property for 2.2 or 2.4 million dollars, and he went to a different lender and they assessed the property at 1.6 million dollars. So he
Mm-hmm.
went back to the builder and said, this place is only worth 1.6 million dollars. You got to do something about this. And the builder went back to him and said, don't worry, just go to RBC. They will give you your mortgage for the 2.2 or 2.4 million dollars. Don't worry about it. And he's like, screw that. I don't want to take on a mortgage at 2.2 when it's only worth 1.6. So he ended up not going through with it. But Ben Rabidoux and a couple other individuals have definitely been talking since last summer. As they've been seeing this happen. We've been seeing it with clients, but none of the major news industries were kind of talking about it for whatever reason. Now they've finally come out. They've addressed that this is potentially going on in the market. What matters about this is that the banks are potentially giving people loans on properties that they've got no equity in. It's worth significantly less than what they purchase it for. They're packaging that up into a mortgage-backed security, and they're putting the risk on the CMHC, which is taxpayer funded and
Mm-hmm.
a taxpayer funded entity. So we don't know how deep of an issue this is, but we do know that there is plenty of condos that were purchased during the pandemic that aren't appraising anywhere close to what they
Yep.
purchased. So how are these buildings as wholes closing if individuals have to come up with all this extra down payment that they weren't planning on having? I don't know if we're seeing a seismic issue on the MLS. We're seeing, yes, active listings up, but you would think by now we would start to see whole buildings just flooding the market. And we're not seeing that because maybe the banks are bailing them out. Maybe it's the government bailing out these condo investors potentially.
Yeah, so I think it like to break it down in two sections, it's no matter what, it's not great for a condo buyer that now is looking to close on something they purchased a few years ago and it's not at value. Like that is horrible. That's a tough spot to be in. At the end of the day, these blanket mortgages are allowing them to close, though they're severely underwater in terms of what the value is. But the risk that we're talking about here is how is this getting now passed on if we've got all of these condos that now have these blanket mortgages that are closing, are able to close, which is great. But at the same point, all these people have no equity now in these products, and the banks are holding all that debt. And then, like you said, if they're passing it on to CMHC, there's the concern. So I think it's something that we continue to watch. But I think that this is just another kind of nail there in terms of like, hey, the condo market, there's some serious challenges going on right now, specifically because of where pre-construction pricing was.
Yeah, and what does worry me a little bit too is if tariffs were to come on board and it was to significantly weaken the Canadian economy and the housing market in the short term. If this is what's already happening, how much worse could it potentially get? Because we still have a very large portion of condos being completed later this year.